You've got $100 burning a hole in your pocket and you want to start investing, but you don't know where to start, what to buy, or if you accidentally invest in the next blockbuster. We're breaking down exactly how to turn your measly $100 into actual wealth.
With apps that let you invest with literally $1, stocks that won't bankrupt you, and jokes to keep you awake through the boring parts. Stick around because by the end, you'll have your first investment. Let's go!
All right, let's address the elephant or gorilla in the room. You've got $100 and you think that's not enough to invest. Wrong. Thanks to fractional shares in 2025, you can literally buy a piece of Amazon stock for $5. It's like ordering from the dollar menu, but for billionaire companies. Back in the day, you needed $3,000 to buy one Amazon share. Now you can own 0.0016 shares with your lunch money. The best apps let you start with as little as $1. That's less than a Starbucks latte. Instead of being caffeine jittery for 2 hours, you could own part of Starbucks forever. Now that's what I call a venti investment.
Let's talk apps because this is 2025 and nobody's calling their broker like it's 1985. Top pick. Number 1, Fidelity. They let you buy fractional shares starting at $1. Zero commissions, and they're not going to scam you because they're like 79 years old as a company. They're the grandpa of investing. Trustworthy, but with a cool new app. Number 2, Robinhood, the app that made investing trendy. Free stocks when you sign up, super pretty interface, and it's so easy my technophobe aunt figured it out. Number 3, SoFi Invest. Buy fractional shares for $5, plus they have banking, loans, and financial advice. It's like the Swiss Army knife of finance, except it won't stab you, financially speaking.
Wait, there's more apps. Public. This one's cool because you can see what other people are investing in. It's like social media, but instead of seeing what your ex ate for lunch, you see what smart investors are buying. Fractional shares from $1, and they're super transparent about how they make money. Charles Schwab. They have stock slices where you can buy pieces of S&P 500 companies for $5 each. You can buy up to 30 companies at once like you're collecting Pokemon cards, except these might actually be worth something in 20 years. Webull. They've got advanced charts, paper trading to practice, and you can trade at 4 a.m. if you're a psychopath who wakes up that early.
Okay, so you've picked an app. Now what do you actually buy? Let me introduce you to your new best friend. Index funds, specifically the S&P 500 ETFs. These are like the Costco value pack of investing. You get 500 companies for the price of one. VOO, Vanguard S&P 500, or SPY, Spider S&P 500. You're basically buying tiny pieces of Apple, Microsoft, Amazon, Google, and 496 other companies. It's diversification on autopilot. If one company crashes, you've got 499 others. It's like having 500 job applications out. Someone's going to hire you. Historically, returns about 10% per year. That means your $100 could be $259 in 10 years without you doing anything.
But maybe you want to pick individual stocks because ETFs are boring. Fine. Here are safe beginner stocks under $100 that won't make you cry. Pfizer, PFE. Currently around $25 to $30 per share, 6% dividend yield. They make drugs people actually need. Unless they cure death, people will keep getting sick. Coca-Cola, KO, around $60 to $65. Been around since 1892. Pays 3% dividends. As long as humans like sugar water, you're good. Procter & Gamble, PG. Around $160, but remember fractional shares. They make Tide, Pampers, Gillette, stuff people need even during recessions. Babies still poop, clothes still get dirty, people still have body hair. These are recession-proof, boring stocks that won't make you rich quick, but also won't bankrupt you.
More safe options. UPS, around $120, but again, fractional shares. As long as people shop online, boxes need delivering. It pays a 4.5% dividend. Next Era Energy, NEE, around $70–80. It's a renewable energy company. Climate change isn't going away, and neither is electricity. AstraZeneca, AZN, under $70, pharmaceutical company with huge pipeline, pays 2.3% dividend. They're literally developing 191 new drugs. Unless humans evolve to not get sick, they're solid. The theme here? Buy companies that provide stuff people always need, not the next hot crypto or meme stock your cousin's friend's dog told you about.
Okay, but what if you want growth stocks? Riskier, but potentially higher returns. Alphabet Class A, Google, wait, it's like $180. But fractional shares, baby. You can buy $10 worth. They own Google, YouTube, Android, basically the internet. Uber, around $70–80. Rides and food delivery aren't going anywhere. People are lazy. That's your investment thesis. Arista Networks, ANET, around $90, they make networking equipment for data centers. AI needs data centers like you need oxygen. Growth stocks are spicier. More risk, more reward. It's like investing in hot sauce companies versus ketchup. One might burn you, the other is boring but reliable.
All right, strategy time. With your $100, here's what you do. Option 1, the boring but smart plan. Put all $100 into VOO, S&P 500 ETF, and forget about it for 10 years. Set it and forget it like a crock pot. Option 2, the slightly spicy plan. $80 into VOO for safety, $20 into one individual stock you believe in. You get diversification and the fun of stock picking. Option 3, the collector plan. Buy $10 to $20 of 5 to 10 different stocks. You're building a mini mutual fund. It's like fantasy football, but with real money and less disappointment. My recommendation? Start with option 1 or 2. Don't get fancy until you understand what you're doing.
Let me walk you through actually doing this. Step 1, download Fidelity, Robinhood, or SoFi app. Step 2, sign up. They'll need your social security number because IRS wants their cut of your future millions. Step 3, link your bank account. Step 4, deposit your $100. Step 5, search for VOO or whatever stock you want. Step 6, click buy and enter $100 or however much. Step 7, confirm, and boom, you're an investor. You now own part of American capitalism. Congratulations, you're basically Warren Buffett, except younger, less rich, and probably better looking. The whole process takes like 10 minutes. It's easier than ordering pizza.
Now let's talk mistakes beginners make so you don't become a cautionary tale. Mistake number 1, checking your portfolio every 5 minutes. You'll drive yourself insane. Markets go up and down like my motivation on a Monday. Mistake number 2, panic selling when stocks drop. If you invested in good companies, short-term drops don't matter. It's like your Wi-Fi. Just because it's slow right now doesn't mean you throw out the router. Mistake number 3, buying whatever's trending on Reddit. Sorry, Wall Street bets, but meme stocks are gambling, not investing. Mistake number 4, not being patient. Investing isn't TikTok. Results take time. This is a slow cooker, not a microwave. Warren Buffett didn't get rich by checking his stocks during lunch.
Here's a pro strategy that sounds fancy but is dead simple. Dollar cost averaging. Instead of investing your $100 once, invest $25 every week for a month or $100 every month for a year. Why? Because you're buying at different prices, sometimes high, sometimes low, so you average out. It's like shopping sales but automated. You're not trying to time the market, which is impossible. Even professionals can't do it. Every app lets you set up automatic recurring investments. Set it to buy $25 of VOO every Monday, and your future self will thank you. It's like a subscription service, except instead of spending money on Netflix, you're making money.
Quick tax talk because adulting. If you're investing in a regular brokerage account, you'll pay capital gains tax when you sell for profit. It's like the government's cover charge to the wealth club. But if you hold for over a year, you pay less tax. Long-term gains equals lower taxes. Short-term gains equal the government takes a bigger bite. Also, Roth IRA accounts. You can invest $7,000 per year, 2025 limit, and it grows tax-free forever. The catch is, you can't touch it until you're 59 and a half without penalties. It's like a piggy bank your parents locked until you're mature. Most apps offer Roth IRAs. Start one now, and your 60-year-old self will send you a thank you note from their yacht.
Let's talk about compound interest, because this is where the magic happens. Einstein called it the eighth wonder of the world. Here's how it works. You invest $100, it grows 10% to $110. Next year, you earn 10% on $110, not just your original $100. Your gains make gains. It's like your money having babies that also have babies. If you invest $100 a month for 30 years at 10% return, you'd put in $36,000 but end up with $217,000. That's $181,000 in free money just from time and patience. This is why starting young is crucial. A 25-year-old investing $100 a month ends up richer than a 35-year-old investing $300 a month. Time is literally money.
Let's get motivational, because I know $100 seems small. But listen, every billionaire started somewhere. Warren Buffett bought his first stock at 11 years old for $38. Now he's worth $100+ billion. You're already ahead if you're starting before 30. The median American has only $8,000 saved. By investing your $100, you're in the top percentage of people your age actually doing something. Most people talk about investing while scrolling TikTok. You're different. You're watching this video. You're learning. You're about to take action. That $100 investment today could be worth $1,000 in 10 years, $10,000 in 30 years. Every journey starts with a single step. Yours costs $100 and comes with potential millionaire status.
Quick resource dump. Websites to learn. Investopedia.com has beginner guides for everything. YouTube channels like Graham Stephan, Andre Jick for investing content. Podcasts, The Motley Fool and Planet Money for easy listening. Reddit, r/investing for community. Ignore r/Wall Street bets unless you want chaos. Books, The Simple Path to Wealth by J.L. Collins, literally the investing Bible. Apps for learning. Public has educational content. Fidelity has articles. SoFi has financial planners you can talk to free. Also, most apps have paper trading. Practice with fake money before risking real money. It's like a driving simulator before you get on the highway. Use these resources. Knowledge is power, and power is money.
And that's how you start investing with just $100. Let's recap. Download Fidelity, Robinhood, or SoFi. Buy VOO or SPY for safe S&P 500 exposure, or pick individual stocks like Pfizer, Coca-Cola, UPS, and AstraZeneca. Set up automatic investments for dollar-cost averaging. Open a Roth IRA for tax-free growth. Be patient and don't check your portfolio obsessively. Most importantly, start today. Not tomorrow, not next week, today. Your future self is literally begging you. If this video helped, like and subscribe for more investing content that won't bore you to death. Comment below with what you're buying first. Are you team ETF or team individual stocks? Now, close this video and go invest. What are you still doing here? Go! Gorilla and Gamer Girls signing out. Peace.